What's up guys, it's Flash with tradingwithflash.com. In this week's episode of Live Trading Tips, it is a screen record, so stay tuned.
What's up guys, it's Flash with tradingwithflash.com. So in today's live trading tip video, I want to kind of go over the importance of daily charts, and I want to also go over where to buy on stocks that's running up and your chances to get in on breakout patterns, and that's a good buy point on stocks that's running for the day. I used to struggle with it in terms of stocks that's running and everybody's making money on. Where can I get in and where can I get out of the stocks, and good signs to buy. So we're going to cover all that in today's video. The reason why I'm covering how important is the daily pattern today is because solely being on this stock OGEN, personally it was looking pretty shitty pre-market. I wouldn't really have any interest in it. It was slightly flagging out, but I didn't like this price action that was going on here. Down the bottom it was fluctuating between every 2 cents up and back. It was fighting a terrible volume. Now when it broke out here at the bell, it didn't really do much either. Like the bell's here at 9:30, it just flogged to the side a little bit, but all of a sudden it boomed. And what I want to show you here is, because sometimes you're left in a position that you're saying to yourself excuse me, you're left in a position saying to yourself, well, why did that run and what happened? I always use a daily chart as well. Now obviously not on this monitor, but on a different monitor I have, it's split into a screen of 4. So I have my montage, a 1 minute, a 5 minute, and a daily chart, and then I have various other screens, but that's just an example of one of them. But how important is a daily chart is exactly what you're looking at here. Is a daily chart. I want you to flick over to it and just kind of understand the importance of what it's doing here. Now there was numerous red days. You're looking at over probably 10 red days there, if not more. But this is a pattern that we're kind of looking out for here, is what we're kind of trying to keep an eye on. This pattern is called a fallen wedge pattern. And patterns on a daily chart are a lot more consistent, and you'll have a lot more of a move on a daily pattern breakout than you will an intraday chart pattern. Although intraday chart patterns are great, but they usually don't have as big as a move as a daily chart breakout. So that's why I tend to use them both. But this is called this pattern right here is called a fallen wedge pattern. It's just straight down, and when a signal to buy here is when it breaks out of this channel that it's in, a downtrending channel. Now what I really liked about this is it's holding yesterday's close here at 80 cents, and that's tested that as a support and a resistance numerous times, as you can see here. So it held that. Now it got its pop, but as soon as it broke out of this, not only did it break out of a channel, but as well is it broke over the dollar, and this is your perfect buy point here, right at the dollar. $1.01 was your breakout point, is when you would have purchased this. If you seen it popping up, you probably would have got in it from the 90s. There was a bit of a pullback in the 90s. That's when it kind of spiked a little bit. It would have been a good jump in there to ride it, to test the dollar. If it didn't break it, then I'd cut it, or I'd add over the dollar, just depending on the volume coming in. But this was your buy point here at the break of $1, and you got a really good run up, but it's sold right into a resistance. Now sometimes resistance are hard to spot. Normally people teach you when they're looking at resistances is look up to the left, and they would spot this straight away. They're saying, okay, that's resistance, okay? But then you're looking at the chart saying, not really, because it is a clear resistance, and old support becomes new resistance, but it's too far away from the dollar. It's very unlikely you're going to break from $1 to 140 without any hassle. So you just kind of sometimes have to search for your resistance a little bit more, and here it is here, $1.25, and we peaked exactly at $1.25 and got rejected, because you can see it here with the wicks that was shown. It was resistance with this wick showing a support coming along here. it's clearly tested it numerous times. So that is a clear resistance, a gap fill as well, but it was already filled previously, so you could ignore that. But my point is that this is a clear resistance, and it sold straight into the 125 and pulled back. That's a 25% gain from your dollar. That's huge. That's absolutely huge. 1,000 shares, $250. Big move, big move. But that's the importance of a daily breakout chart. And as well, I want you to understand that there's tons of chart patterns you can focus on. I tend to focus on about 6 to 10 maybe. Some of them are more popular than others, but that right there is a classic fallen wedge on your daily chart. Now kind of just switching over to give you a different stock. This is AMK, or this was running up today right at open. So now before this, I've already charted this out for you, but beforehand I would have been struggling of where to get in these, and you're just looking at them run and you're saying, well, there's no chance of getting in. I personally don't like buying a guess of a pullback here. That is a technique some people use, is a 50% retracement on the first on a candle, a large candle like that. Some people use that technique and it works. I personally don't. It's just too risky. The success rate isn't huge in that thing, but people would buy in there, the 50% retracement on that candle. But here's a clear one I'd like to use. That's just an F breakout there. It's clearly pre-market high breakout, but it's making an F-shaped flag. That's a buy-in point there. Here we got a little pullback of a flag. Again, it was a nice buy point to break a flag. This was a nice break of flag. You got a whole ride up. Again, these are what I like especially as well. It hit the whole dollar and pulled back. Now, if that had went through the whole dollar and then pulled back, I wouldn't like it so much, because I'd feel it's kind of an up and over short. So it gets up, breaks the dollar, and people short it back down. But this is what I like, when it hits the whole dollar but doesn't break it, and then it gives me a chance to get in because it forms a pattern. I like this because now it's giving me a chance to get into stock to make some money off it. We got a little flag there, and we got the break of the flag, which in this case you're getting in about the 95-cent mark for the break of flag to test that. Now if it did fail, I would cut it straight away. I wouldn't wait for another pullback to get the break back in. I just cut it and get back in. So your 5-cent comfort cushion there, but you're getting into break of flag 95, 695 there. It breaks through 7 very easily. Now this big pullback here, that's a perfect candle. Let me throw it on the 5 of perfect flag. You can see it a bit better on the 5. So there we go. Yeah, it's a much nicer looking flag, especially that the wicks are getting eaten up here. It's shown a lot of interest in it. Now a lot of people would set their stop loss below the 7 or break even, so they would have got stopped out here. So I intend not to usually set them exactly like that. Now if I would have sold into here anyways, I wouldn't have waited for the pullback to the whole dollar. But a lot of people like to pull back to the whole dollar after a breakout because it's shown a stronger buy signal. But this is a perfect flag to get in again for the break of the upside. The reason why I don't like this one so much, now it's great in hindsight and it's easy to do patterns when the market when you're not in the trade and you're looking back at past history, but this one I don't like, and I'll tell you why. Is because it started to break down the 9 EMA, and I didn't like the way the candle patterns were shaping up here. Although you're getting the wicks, but you're not getting the volume, and I just don't like the price action here. So I didn't like this flag pattern as well. It started to break down the 9 EMA too much on the 5, so that means that it will be worse on the 2 and it will be terrible on the 1. So there you go, like breaking down on the 2 or breaking below the 20 on the 2, and on the 1 I'd say it's just horrible. Yeah, so it's not something I'd be interested in, and that's why I wouldn't be interested in this. You're getting too much confusion going on here. But I just wanted to make this video to show you where to buy on your pattern breakouts. Very simple, very easy to understand. So kind of recap over the video is always look at your daily patterns on form and on the daily chart to decide on your entries and exits as well. Find support and resistance on the daily too. Now, if there's no pattern on the daily, doesn't mean you can't day trade it. It's not the case at all, but it's nice to get a pattern on the daily chart as well as an intraday chart. And it's good to see support and resistances on the daily, and then also consider your patterns when you're day trading, the flag breakouts and all the other patterns you like to use for your entries and exits. Okay guys, that's it for today's video. I hope you'll enjoy. If you have any questions, please put them in the comments below. I'm more than happy to help anyone, or if you want to reach out to me by email, it's no problem at all. Once again guys, thanks for your support and God bless.
So guys, I really hope you enjoyed the video. I have prepared a full A to Z module on how to get started in the stock market. It is in the description below. It is based for beginners on how exactly to start from the very start to the finish and what I would recommend along your journey. It is absolutely free, so go check out the link and God bless.